Coming up on the Suze Orman Show, we're going green to save you some green. I'll tell you some easy things to do that will save you money and help save the planet. Also, green funds, are they as good for your wallet as they are for the environment? Justyn is with me now from New York City. Justyn, you have a question about investing with an eye on the environment, I hear.
Hey there, Susie. Thanks for having me on.
Anytime, Justyn.
Yeah, I'm 31, environmentally conscious, and have mostly been investing in mutual funds over the past few years. And I've lately been looking into environmental investing. And I've noticed that a lot of the environmental funds or the green funds that are out there have higher management and load fees than other mainstream funds. And I wanted to get your sense on why that might be, and also any suggestions on green or environmentally conscious investment choices that people can make.
And did you have a particular fund in mind that you were looking at that you're saying has a high load, so you can give me an idea of what you're looking at there?
Yeah, one example actually is the New Alternatives Fund that's out there. It's an interesting fund that's out there just because it doesn't really necessarily invest in a lot of the mainstream companies that are out there, but more of the funds that are looking into wind power and recycling and other alternative sorts of companies that are doing some really interesting research.
Yeah, you know, it's funny, Justyn, because years and years ago, when I first started in this, it wasn't the environmental funds that everybody started to talk about. It was these socially conscious funds. Like, God forbid we should be investing in anything that did anything to hurt people or anything like that. And way back then, I noticed that those funds all had very high loads and high expense ratios. For those of you watching right now, a high load is when you buy a fund and you pay a commission to some financial advisor to sell you that fund. It can be 4.5%. Sometimes back then it went as high as 7 or 8%. And that was money that simply went to the salesperson to sell you the fund. They had nothing to do with managing the fund, but that's what you paid. Then within every single mutual fund, there is something known as an expense ratio. That is the amount of money that goes to run the fund. Goes to the portfolio managers, goes for all kinds of things. And I think a good expense ratio, truthfully, is anything under 1%. However, these socially conscious funds back then always had an expense ratio of 1.5%, 2.5%. They were quite high. And in the same way today, there are many environmental funds that I'm finding have a load, but they do have expense ratios of about 1.25%, which is, I think, about the expense ratio of the fund that you just mentioned to me. Have you checked that out?
Yeah, it is about, I think it's 1.25.
All right, so that isn't so bad. But the problem is, I would never buy a loaded mutual fund. It's just how I feel about things. I don't understand why buy something that has to go up 4.5% just for you to break even. That I don't get, when in fact there are so many ways you can do research today as to what a good fund is and buy it on your own through a good discount brokerage firm. So to that end, my dear Justyn, I brought in my good friend to talk to you tonight. Her name is Benz. Maybe you know her. She happens to be the director of analysis of mutual fund investing for Morningstar. And I love this woman. Hi, Christine. You're on here with us now. And I was just telling everybody I love you because you have nothing to gain, really, by telling everybody what mutual funds are good, what mutual funds are not. And since you make your livelihood by studying these funds, by rating these funds, which is what Morningstar does, everybody, I thought, why not have you on to answer this question, not only for Justyn, but for everybody right now, because everybody is so interested in these green funds. Girlfriend, what do you think about them?
Well, Susie, to me it feels a little bit like amateur hour out there. There are a lot of new funds that have come to market. I tend not to think that buying such a focused fund makes sense for most investors. For one thing, as you said, they tend to be expensive. And also, you have a lot of unproven managers trying to invest in this particular space. So I think you need to be careful.
Now, before you go on, because I know you're going to tell us which funds you like, but Justyn, does that surprise you?
It's not too surprising. I mean, it definitely sounds realistic, and it sounds like some pretty good advice.
All right, so given that, let's have Christine tell everybody what her favorite funds are and how she would take advantage of this so-called green area.
The first fund I would recommend is a fund called Winslow Green Growth Fund. This is a fund that specifically targets environmentally friendly companies, companies that are trying to provide alternative energy and clean tech solutions, a lot of the buzzwords you hear out there. It is a no-load fund. What I like about it, its differentiating characteristic is that its manager, Jack Robinson, has actually been investing in this space for more than 20 years. So he's not a fly-by-night manager. He actually knows this area. He and his team invest heavily in it and know these companies well. So this, I think, is a standout in this particular group.
Is there a minimum that people need to invest in this fund?
Yes, it actually has a fairly high minimum of $5,000.
All right, so that's why I asked you that question, because there are a lot of people, Justyn, when you hear that there's a minimum of $5,000 to invest in this fund, does that knock you out of the ballpark?
Definitely.
All right, so do you have, my dear Christine, another fund that people who want to get involved in this area can get involved with if they have lower amounts of money to do so? Are there any out there at all? And if there aren't, that's okay. Everybody should know that.
One other fund I would take a look at is actually a broadly diversified fund whose manager happens to have an interest in this alternative energy / clean technology space. And that's called Fidelity International Discovery. It has a minimum of $2,500, very low annual operating expenses, which is a big plus. And we also like its manager a lot. This is Bill Kennedy at Fidelity. One interesting thing, Susie and Justyn, is that Europe and Japan tend to be a little bit ahead of the curve versus U.S. companies in terms of embracing environmental technologies. And so I think that that's a plus in favor of this fund because it does focus on overseas stocks.
Okay, now back to Justyn again. I just have to ask, does $2,500 knock you out of the ballpark?
No, that's definitely doable.
All right, so I just have to ask one more question. Are there any exchange-traded funds that are specializing in being green?
There are a lot of exchange-traded funds, Susie. I think something like a dozen funds have launched over the past year, and they tend to be all pretty narrowly focused. So they focus on a single slice of this environmental space. I tend to think that most of these funds will be too volatile and too narrowly focused for most investors.
Now, personally, I like exchange-traded funds better than mutual funds for many reasons, but not when they aren't diversified enough. So be very careful and heed the warning of Christine here. Don't get involved in exchange-traded funds in the green area because they're not broad enough for you at this particular time. Justyn, did this help you?
A great deal. Thanks, Christine. Thanks, Susie.
All right, boyfriend, you take care. Christine, we always love having you as a guest on the Suze Orman Show. That's Christine Benz from Morningstar.